In this video, guys, let's look at the best day trading markets. Stay tuned. Hey traders, warm welcome to you. All right, so this is a bit of a different one because I know that many traders specialize in one or two markets. Maybe you specialize in a couple of currency pairs, maybe specialize in a couple of indices, and I think that's good. You've already made this selection. You've already said, hey, I've made that selection based on X, Y, Z, and that could be the trading hours, it could be the way it moves, it could be the accessibility you've got on your broker platform, any of those things, and that's fine, and maybe this isn't for you, but if you are trying to decide what to trade, and maybe this is for you stock traders out there, maybe it's for you traders that are setup specialists rather than market specialists. And what I mean by that is you specialize in a very specific setup. You say, hey, I trade exhaustions, I trade bull flags, I trade this, and you screen the markets to find the best setups. This might be more applicable rather than someone who trades the same thing day in, day out, and they kind of get in tune with the ebbs and flows and maybe don't need some of these primary things that perhaps make a good day trading vehicle for those not specializing. Okay, so you are a setup specialist or you're looking for a market to trade. What are the big things you need to see? So I think the mistake that a lot of traders make, and myself included, sometimes in my previous years, I would look at the number or the absolute move on the day and go, why did I not make more money? Why did I not capitalize on that? I'd see the Dow up 300 points back then, there was a lot of 300 points, now it seems like it does that in a sniff, and I'd go, why did I not capitalize on that? And it'd frustrate me. But in actual fact, I'm missing the point that going from here to here for 300 points is a lot different than going from here to here. That's a nice tradable market. This is, unless you're on it very hard to, unless you're absolutely specialist in this type of thing, you've got momentum, but you don't have volatility. So momentum is absolutely key. You need the market to go from somewhere to somewhere else and to carry on and to oscillate, and sometimes it comes back, but it's that extension, it's that wave, and it can't be too rhythmical. You need to have some kind of supply-demand imbalance. You need to have some kind of inefficiency, otherwise you're not going to be able to get hold of any trades, right? And if it's just chugging, it's not very great. So you want momentum, one direction, maybe to the other direction. It's okay to switch, but you just want some momentum, because as traders, that's how we identify. And very often as traders, our skill set, even though we can't kind of articulate it in this way, is when volatility contracts, we're quite good at seeing when it's about to expand. And so we see the breakout, see it getting quicker, and we jump on the breakout, grab a chunk and come back. Or we see the volatility expanding into highs, stalling, we take a reversal. So that's often how we are most effective as a trader. So we need the momentum. Volatility as well, similar to this, basically is what this is, right? That's a very volatile market. That's offering plentiful opportunity. Now, we aren't necessarily looking to buy here and sell here as a trader. In fact, none of us are trying to do that unless you're a swing trader. You are looking to grab high probability chunks. The high probability chunk might be this bit here. It might be this bit here. It might be this bit here. These are the chunks that you're trying to get. Maybe it's from here to here. So it's a lot different. And it's the same order of magnitude move going from this low to this high, or this low to this high, sorry. But it's no volatility with it. So you might have this kind of 45-degree trend, which is all very well, but unless you're here, you don't know if it's going to turn, you don't know if it's going to end, you don't know to jump on long, you don't want to jump on short. You're kind of a deer in headlights going, and I don't like these. I've been open and said I do not like these grinding trend days because I find them very difficult to read. And very often I say, if there's a grinding trend day, I'm not on it. I'm either going to wait for a deeper pullback and have a resting bid, or I'm just going to leave the thing, come back tomorrow. Whereas this, breaking to highs, breaking down to lows, testing levels, exhausting, supply demand shifting, that change in supply demand is what we read as traders. So we need the momentum, but we need the volatility with it. We need to see that. So the very best markets to trade, I think, are the ones that possess this type of stuff. They go from A to B, but actually when you kind of grab this, if it was a piece of string and you pulled it out, it would be much longer than this. This kind of from here to here, if you pulled that out, it would just pull out the kinks and maybe be to here. If you had this one from here to here and you pulled it out, it would probably be 3 times as long because you've got all these oscillations. That gives us the opportunity. So momentum, yes, definitely. We need momentum, please. Volatility, yes. How about liquidity? Yes, I think that goes without saying, but that just means that you don't get stuck in something that's illiquid, whether that's a low float stock, whether it's a thinly traded stock, whether it's a thinly traded commodity. I've got a story where I was trading, what was it, cotton or orange, something really stupid, like a 4-month contract, and I thought, oh, I can read this depth of market. That was kind of my edge at the time. Oh, why don't I start trading some of these thinner instruments, start working orders? I can spot these algos and get in front of them. I ended up being caught in this trade. I'm pretty sure it was orange juice actually. It was orange juice or cotton. I can't remember, one of those, but obscure, right? Obscure market. No liquidity. It was horrible. I was stuck in this trade. I thought I'd read this position. I wanted to get out and I couldn't because there's no liquidity. And not like I was trading thousands of contracts either. I just couldn't get out of it without having massive slippage. So I'm like stuck in this going, oh, that was a big lesson that I'd never get into again. So don't get tempted to trade something that's illiquid. That might be, like I say, a stock that's very, very liquid. It might be a commodity that's very, very liquid. I know most of the time things are easy to trade. There's loads of liquidity out there, but it's worth mentioning. It's easy to get seduced by seeing that going, oh, lovely shiny moving market and I want to get on that, but actually when you look at it, there's lots of gaps involved in it. It's a liquid. That's just dangerous. Just dangerous. So you got to have liquidity. And then the final thing is to make sure you've got some tight spreads. And that tends to go hand in hand with liquidity. But if you're day trading, you don't want to be paying a fortune. You know, there's some exotic markets out there like Forex markets and, you know, you've got some commodities, depending on which broker you're using. The spreads are just not really suited for day trading. Yeah, you can kind of justify it. But if you're, you know, trying to take these high probability chunks, then you don't want to be paying 25% of that in spread because it really just puts you on the back foot straight away. So look for momentum, look for volatility, look for liquidity, look for tight spreads, and look for this type of move that goes from A to B by really like extension. Think of it, I can't remember who said, I think it was Linda Rashku said length of line. So you grab the end, you pull it. How long is that? The longer that is, the more opportunity there is for a trader. If you pull it and it's not that much, then unless you're on the beginning, very hard to take advantage of that. Best day trading markets. Take care. See you next one. Keep your risk managed, guys. Bye bye.